Hello, I'm Susana from Holland Properties, based here in London. It's a sunny day on this side today, and this is our property newsroom, our monthly roundup with Freddie, who works at Investate and is based in Hong Kong. Morning, Freddie. Actually, it's more like afternoon to you.
Good evening. Yeah. Good evening, Sue. Yeah, it's lovely here. The weather's amazing. Not so much in London, I hear, but yeah, good to see you.
Good to see you as well. It is actually quite sunny in London, so for once.
Oh, really? Nice. Fantastic.
So look, we're obviously gonna have a chat about what's happening in the market in the UK,
Yeah.
particularly London, where we're based. We've been reading quite a lot of reports from Rightmove, from Savills, from Zoopla. So just trying to get a sense of your experience over there, what I'm experiencing over here in relation to sales market, lettings market, and kind of give an idea to clients as well of what we've been feeling on the ground as we went through 2022 and as we get into 2023, hoping for a lot better year. So what is your intake from the reports we've seen so far? What is your feeling from your side?
Yeah, thanks, Sue. Yeah, a lot more positive than probably I would have expected. If you cast your mind back to October, November, December, when you're sort of seeing the repercussions of a lot of geopolitical stuff in the UK, inflation and interest rate rises. We were told that we were going to go into quite a big recession that would last 2 years. And obviously October, we had Halifax, I think it was reported that UK house prices have come down for the first time. I think it was around 2%. But actually, as the kind of year went on, the UK economy actually didn't shrink as much. Actually grew, I think, in October. And then by the time we got to December, Zoopla are reporting that actually interest rates will be around 5% at the start of the year. And that turned out to be true. A lot of banks basically lowered their bank margin. Because obviously interest rates have gone up so much that actually they've got their margin back. Interest rates have been zero for so long. So I do think there's kind of like a reshuffling of the scales. And then as we read those reports in January, yeah, really quite positive. I think it's still going to be a really challenging year though. I don't think we're expecting to see, bounce backs, potentially. If anything, I think there's probably a bit. Yeah, sorry.
I found it to be far more optimistic, considering that before it was all just everyone was a little bit concerned on what's going to happen. So it does create that stability. But
yeah.
I remember us talking before Christmas time that the markets have a way to sort of self-regulate itself. And I think that's what we're going to see throughout the year as well. Obviously a little bit more conservative, but the demand is still there. It is about supply. We don't have enough units available for clients to rent. So naturally rents will continue to go high. It's just not the sort of levels we've seen last year. I mean, there was a huge surge in September, and now it's softened a little bit towards Christmas, and then came in the mini boom in January of interest. So it's good to see all these reports kind of stating similar, that the recession is not going to be what was predicted in terms of really, really bad. I mean, compared to what we've had so many years ago. I think we're just kind of borderline from before, and we'll be okay. The markets are looking positive. There is still demand. Sales have increased as well. So yes, that's definitely something to look forward to. I mean, from us over here, it's always about looking for new stock to provide to our clients in terms of sales and in terms of lettings. In your clients, what have you been hearing from their side?
Yeah, obviously we met up in December because obviously I was back, and it was great to be back in London. But Yeah, since I've been back in Hong Kong, Hong Kong's super busy, which is amazing. Obviously, the borders are reopened here now with post Chinese New Year. So I've just come from a few client meetings. It's great to see it so busy again. But I'd say the conversation I've had so far with some of my investors is actually they see the UK as a bit of an opportunity this year because although the market is probably not going to be as strong as it once was, well, actually that's a buying opportunity. And I think there's some, I think people are monitoring the US as well. The dollar strength. So obviously here you've got the currency suit. So obviously currency, the pound has just been on its knees. It was like parity with the dollar almost last year. So, that's not going to last forever. So yeah, I mean, assets, it's probably what people are looking for at the moment. London is a safe haven. So I'd say the appetite is really, really strong. There's still a lot of good reasons. And I think it's just really good news that we're not going to be, look, who knows what's around the corner, but, we're not going to go into a, really deep, bad recession. It sounds like it's going to be, pretty shallow. And actually the supply and demand for property is going to be, imbalanced by a lot. So, yeah, the demand is not an issue from Hong Kong. It's just a case of, getting the right opportunities, the right price, and sticking in for the long term. But I just had a question for you on the rentals, because I saw that there was a good report from Rightmove. Obviously, these reports are amazing now, because before it was just land registry, which used to be like 2 months out of date anyway. Whereas a lot of these reports, they're pretty current. So, but they finished at the bottom saying that, rental growth is going to be around 5% for 2023. I know that you mainly deal with London, but what's your take on that? Because obviously last year was just amazing. I mean, our portfolio was, really was a high achiever, but do you think it will slow down next year? What's your gut feeling, and what's it dependent on?
Well, if you think about it, predicting a growth of 5% compared to a growth last year where we've seen rents going up so much, compared to pandemic, it's not that bad if you compare pandemic where it has dropped versus how it went up last week. So if it's going up further 5% from what has already increased last year, then that's a good sign. It's not a bad thing at all. It's just that we're not saying, oh, it's been 25% since the pandemic. Maybe last year, I'd say if you're conservative, 15 to 20%, Foxtons would say 30%, but we're a bit conservative. So if we're saying that they are going further up by 5 compared to what we increased last year, because remember last year we were analyzing renewals, there was the movement in people leaving or trying to retain their properties to keep the prices low. Even though the rents went up, a lot of tenants want to stay because they know, despite the fact that the rent is going up, it's still not going to be the same. If they go out on open market, they have to pay for leaving a property, cleaning, checkouts, and moving in, add other sorts of fees. So obviously they're trying to negotiate rents, but there's still an increase. So the landlord is better off either way, either by renewal, or if you want to put it on an open market to get a little bit more than that. So
and surely it's unsustainable for like prices that continue to
exactly
like that rental wise, right?
Exactly. If you see the data on inflation and salaries not going up versus the rental prices going up, the affordability is different. Someone who was renting a 2-bedroom for 2,200, if that's now an average in London for a 1-bed, obviously their salaries here, if you do references, you have to earn 5 times more to afford XYZ. So if your salary has not increased, but the rent has, that means you're no longer in that sort of bracket of a bigger property, more space. So it's now kind of changing from pandemic, let's go outside the city, let's get more space, coming back into the city and compromising on having less space to be here to save on rent. but the rents will still go up. That is the fact. They're not going to go down.
Yeah, that's quite interesting because, yeah, I mean, if you look at the stats again, that there's a talent shortage in the UK, more so than in any other developed economy. So imagine if you had, an oversupply of talent. That means you'd have an oversupply of people. That means you'd have even more demand for property. It's quite hard to believe that you've got an imbalance of. It probably just shows you where the supply of property is, right? That's probably the one thing that's really lacking at the moment is supply of new build, good properties in Zone 2 to Zone 3.
And it's not just in London. All other major cities, they've seen increases as well of rents. There was a report, I think it was Zoopla had this amazing map showing that...
I've seen that.
Yeah, London had a average of 2,200. Then if you go down south, which is what? Sort of the coastline, Brighton and surrounding areas, and further down in Kent, it's the second one with the highest rent, but it's still a proximity to London because you have good transport to the city. Then the same thing happens going a little bit further up. But again, more the line of London where the rents, and as you go up north, obviously, they have that increase compared to what was before. But it's still not the numbers we've seen here. It's a huge discrepancy. Some of them is like below £1,000 per month. It's 800, 600 and so on, way up north, close to Scotland. And only they've mentioned, for example, Hull in particular has not grown much, but it has grown a little bit. But it's an area there's a lot of unemployment, a lot of housing. So it does show how everything has been affected. All the rents have gone up in line with the region and the demand. As universities, there's more demand. So,
Sattles kind of sum up nicely, don't they? They say, look, London's seen the sharpest kind of increase, but that's because it's had a recovery, right? So you've had a recovery from pre-pandemic, and then you've had a surge of demand because, this time last year, basically everyone got ordered back to their office. They all wanted similar properties. There's only a certain amount of those properties, so it kind of like a big rush. But people forget, like other kind of companies won't say who they are. You mentioned one of them. They would say, oh, it's gone up 30%. Yeah, but they probably went down on average 20% in London during the pandemic. So the real kind of growth over like a 3-4 year period has been different. But I'd say the outlook is still quite strong. And, we're not seeing mass kind of new builds come to the market. So what's going to give, but wages increasing is definitely an issue.
Yeah, no, absolutely. Even with new build, if you'll notice some of the developments, the prices are quite appetizing when you're buying off plan. Compared to years before, everything was so rigid.
Yeah, definitely.
It's this price on the highway, take it or someone else will. There is now more flexibility to negotiate a little bit with developers directly and get a better deal. And a lot more people buying to rent straight away than buying to live in, because there's good opportunities out there. In London, outside London outskirts, there's really good opportunities to buy. And there's also, I would say, less occasional landlords around because they're selling at more appetizing prices as well. So it is regulating itself. I think it's good news. It's not going to be the pandemic, that recession that everyone was in fear of. It's definitely much, as you mentioned, much softer. And there's a lot of good deals out there. Rents and the rents will eventually stabilize a little bit, but there's still good investments to be made when you buy to rent.
Yeah, definitely.
Look, from your perspective over there and having seen everything that's happened last year, Hong Kong has almost lifted all its restrictions. Do you find that there will be more clients kind of going in and out, kind of coming to London to see more units? Do you find that people will still be focused on investing maybe off plan, already built? What do you think the interest is over there?
Yeah, absolutely. I think that the fact that you can travel freely here now is definitely you're going to see transactions go up here. Although, typically investors here, that they're quite happy by off plan 2 years, off a brochure or going to an exhibition. Although the trend over the last 5-6 years have been that, clients would prefer to go and see it. So yeah, I think it's definitely helpful that people can come over and, real estate, it's an asset that, it's real, it's tangible, you want to kind of walk the streets a little bit. So we definitely have clients that want to do that, and we want to do that. I've done my fair share of quarantines, as Sue. So, because I've had to come over and see it. You can't, how can you get the message across without really, walking the streets and seeing what's around, getting the sentiment. So it'll be great that clients can go and do that now, and I can stay here, sort of thing. So for me, I do think it's important. I do think you touched on a point there about negotiating. I think it's a really good time to negotiate, because I think when that rebound does come back, and if you look at the Savants reports in 2-3 years time, it predicts centers to have, the sunshine, the kind of the 10% per year for like 3 years. So really, if you're able to position yourself at the moment with a good asset, a good area, that's price sensitive, you get a discount, you're kind of laughing at the moment. So, I wouldn't be hesitating this year. I'd be negotiating hard, but I'd be looking to pull triggers this year because, as soon as confidence is back, you're definitely going to see developers increase their prices and everything. So I think it's going to be a really good year.
Yeah, well, I'll give you a little bit of experience I've had. So last week, we traveled to Dubai to meet some of the clients that are based over there. And the sense that I got of who's in Dubai in particular, there's a huge boom in real estate of some investing in Dubai in particular, which is, I find, a market that is a little bit more volatile because it's, there's such a rush that you buy inflated, but then you have those clients who are well seasoned or have invested in the UK, have their finances ready to look for those good deals that are coming across. So they are already prepared, just waiting on the sidelines for when the moment comes to kind of take action and buy more property in UK. So for me, that's a good indicator. The fact that they're based there, they're not investing there where there's this big hoorah and so much marketing going around about Dubai. They're actually waiting to put the money in the UK where they have other units. I think that's also a very good sign that people still have confidence. And there's all the reasons to have confidence in the market here in the UK. It does stabilize itself. It's a resilient country. It's gone through so much and always finds a way out and balancing things. So, yeah.
Definitely. Good to hear. Yeah. I heard it was raining in Dubai.
It was for 3 days. It was raining and raining.
Oh my God.
Yeah. So it
was. You can bring in the weather.
Exactly. It felt like I was in London, stuck in traffic from meeting to meeting, with rain pouring down. Freddie, I just wanted to kind of round everything up and let you and some of our clients know, we've talked about this before, we will be back in Dubai. Very exciting news. End of April, beginning of May, we'll be having the launch of our site over there, which I'm not going to reveal much more. So just kind of planting the seed out there. But amazing site that we've got, really well located. We're slowly kind of advising some of our clients of where to invest. So there will be the great opportunity in Dubai to see what's happening with the site, when is it going to complete. And obviously, you're invited to come along and have a look.
I'll book my flight. So I'll book my flight. Any excuse for a bit of sun? No, I love Dubai, and that sounds super exciting. Obviously, I know the side that you're talking about, Sue. I think it's great that we're giving our clients in the Middle East a first look. Super excited. So hopefully, I can join. We can meet investors and talk through the benefits of our new exciting project. So good luck, and I'll see you there.
Thank you. See you there.
Thanks, Sue. Take care.
Thanks, Freddie. Take care as well.
See you later. Bye-bye.